So let me just introduce AMRO a little bit. I was with the IMF. I was in the Monetary and Capital Markets Department. That's where in a way I started this work stream in the IMF on digital money issues. So I retired from the fund earlier this year and joined AMRO. AMRO is really ASEAN Plus 3 Macroeconomic Research Office. It's a mini IMF in Asia. So this started about 15 years ago. As some of you recall, there was this idea to create an Asian Monetary Fund. Of course, that idea didn't pan out, but we started the surveillance function. So now we have an organization that's very much modeled on the IMF in Asia for surveillance. So I'm continuing the work here, and we have a group of people who are interested in on-chain monetary systems. So let me focus a little bit on the international monetary policy considerations. As a way of introduction, just to say that modern monetary systems, I think we need to describe them more accurately in order to understand some of why central banks think the way we think. What are the issues that we care about? So modern monetary systems are multi-layered or tiered, comprising of central bank money, commercial bank money, and the non-bank money, with regulatory frameworks to guarantee singleness of money. So I'm going to talk about what are these fundamental guarantees to ensure that the monetary system work in the modern times. Now, the International Monetary System, the IMS, is a collection of individual monetary systems coordinated by international organizations such as the IMF and characterized by strong network effects. So I'm going to focus on in the on-chain world, what are the likely paths of evolution for the international monetary system. So the on-chain monetary systems, if they are to scale up and integrated with the world, will need to meet some basic requirements, such as singleness of money and financial integrity. And so today's presentation, I'm going to discuss some of these policy considerations. So in terms of outline, I'm going to talk a little bit about the structure of monetary modern monetary systems, how we think about use of international currencies, why the dollar is so dominant. Will the dollar be as dominant as it is now in the future in the on-chain monetary system? Or would dollar-based stablecoin facilitate, or actually digitalization create opportunities for other currencies? So I'm going to talk about some of these dynamics. And then, some of these issues are already touched upon in terms of tokenization of assets. Joseph and Darryl and others have already talked about this, but what I'm going to say is very consistent with that. And but finally, I'm going to talk about the role of public policies. Really, for example, the central bank-led projects to enhance cross-border payments, what we are learning from those projects, and also regulatory approaches to crypto assets, since stable coins are still a form of crypto assets. So when we think about the modern monetary system, for example, why Darryl was talking about the role of central bank money, how do we ensure parity of central bank money? We need to think that the modern monetary system is really a three-tiered hierarchy. We need to be very clear about this. So the anchor of this system is the central bank money, because central bank money really defines the unit of account of any monetary system. Monetary system has a single unit of account that's defined by the liability of the central bank. And then to extend central bank money, we have commercial bank money. That's really the workhorse of a modern monetary system. That's most of the heavy lifting nowadays is done by central bank money. And that, of course, is created by commercial banks by extending loans. And that money is convertible to central bank money at par. Now, there's a supplemental layer that's really non-bank money. That's issued by non-banks. And today we already have that. For example, you know, Luohan Academy is part of the Alibaba Group, and in Alibaba Group, there's Alipay. That's one of the largest e-money systems in the world. And this is e-money or non-bank money is really issued by non-banks. Now, this three-tier system is there is guarantee of singleness money or convertibility at par between different components. That's because we have a whole set of institutional arrangements. And the most basic of that, or the important part of that, is that there is tight regulation and supervision. For example, banks are regulated, under Basel principles. There's very tight regulation on Basel on banks' capital requirement and the liquidity requirement. And of course, there's deposit insurance. And on top of that, we have lender of last resort. These are some of the basic institutional requirements that lead to convertibility at par. So convertibility par is not something to be taken for granted. It has to be based on a whole set of institutional arrangements. So if we think about the international monetary system, of course, as I mentioned, it's a collection of individual monetary systems. And that, again, is based on a whole set of institutional arrangements. And there are different drivers behind the use of the dollar as the primary international reserve currency. And that reflects the issuing country characteristics, for example, the economic weight and interconnectedness. Of course, the US economy is 25%, one quarter of the global economy, and that underpins the dollar's importance. And of course, credibility of policy frameworks, for example, Federal Reserve independence, financial market breadth and depth. And of course, it's also a reflection of geopolitics and the geoeconomics. And there is one very important argument that the dollar's strength has a lot to do with the US military strength. And of course, there are other important institutional arrangements. For example, the Fed's willingness to actually provide swap lines for many other central banks in the world. It acts as a lender of last resort, and it may tighten or loosen monetary policy, not entirely depending on US domestic considerations. It may take an international perspective here. And what's not typically noticed is that there is a whole infrastructure underlying international monetary system, underlying the use of the dollar. For example, cross-border payments. And this is the pipelines behind international commerce, international trade, and the financial transactions. And at the moment is primarily based on bilateral correspondent banking relationships. Of course, these financial market infrastructures like SWIFT and other, Darryl also mentioned CLS, continued linked system, and these are natural monopolies. So they dominate. So we see a lot of concentration of financial market infrastructures, given the nature of these systems. Now, there is the international monetary system is really characterized by very strong network effects. So as a reminder, everybody knows what network effects is, but just for the sake of clarity, network effects occur when the private value of using a service or product increases with the number of other users. Once a currency is established internationally, the fact that it is used by many increases the likelihood that others will adopt it. The three functions of money, of course, also reinforces each other. Now, that's the theory. In terms of empirics, let me point out that really a simple observation is that the dominance of the US dollar seems similar to the dominance of the English language. This is really the role of the lingua franca, or it's the role of a vehicle currency. But as an economist, I must say that the empirical literature is actually not very developed because the simple difficulty is that there are not a lot of data to work with because we don't have a lot of data points to explain variation in the international use of currencies. So the dollar has been the main international currency at least since the 1940s, and there has not been much variation in that status. We don't really have a lot of the variation in the data for us to model the change in that status. As a result, we don't really know how to rank the quantitative importance of all these factors I laid out earlier. And the important question here, can we really know the threshold or the tipping point before we actually know there might be a change in the landscape of the international monetary system? What does it take to overcome the network effect of inertia? And behind this is really we need to think about the industrial organization of international liquidity provision. One simple observation is that the dollar dominance reflects dominance of the US banks as liquidity providers. Now, we may not know the causality here in the sense that maybe the dominance itself reinforce these two functions reinforce each other. But we do know there are large sunk costs in establishing the network of bilateral correspondent banking relationships. That's why it's actually not working very well, because we have split liquidity. These are bilateral economic relationships. We see dominance of large banks. We have a lot of market concentration, and so in this market we have a lot of inefficiencies. Um, This is where we see a lot of opportunities for digital money or on-chain world to make a difference. I think Joseph illustrated some of these problems in his presentation. So digital money really provides an opportunity because it allows a peer-to-peer transfer of ownership of tokens. And there are different ways of doing markets, of organized markets. For example, automated liquidity pools allow different stablecoins to be exchanged automatically. So if we can think about an online monetary system, one way, the first way to think about is a mapping of the existing three-layered monetary system to the digital tokenized world. So in thinking about central bank money, we can talk about the central bank digital currency or tokenized reserves. Daryl mentioned earlier whether central banks are willing to issue tokenized reserves, but these are some of the forms, central bank money can take these forms in the on-chain world, and commercial bank money can be projected as tokenized deposits, and the stable coins simply are e-money tokens. So this is very clearly laid out in MiCA, that's the European Union's legislative framework for crypto assets. So the on-chain monetary system should also be multi-layered and anchored by central bank money. And of course, the recent the passing of Genius Act in the US has raised the possibility the proliferation of dollar-backed stablecoins could strengthen the dominance of the dollar. That Genius Act is very clear in terms of that motivation. So everybody's focusing on whether digital dollarization will become really so entrenched globally that other currencies might just disappear in the online world. But let's remind ourselves that there could be countervailing forces because of the tokenization. Or in the digitalized world, actually, there could be countervailing forces. That is, the switching costs between different currencies may actually decline. This is very similar to the argument that real-time translation services like Google Translate may actually reduce the dominance of the English language. In the future, if you can speak to each other in your native languages in real time through translation devices, and then maybe English will no longer be as dominant as a vehicle currency. So the arguments are very similar. Given the time, I'm not going to talk. I'm going to skip a few slides in terms of how the online ledgers are being organized, different programmable forms, platforms are being experimented. I just want to point out, as an economist, it's not clear that these online systems will actually scale up and we are going to see interoperability. So Joseph also mentioned we're still at the very early stages. Real world assets, whether these platforms will scale up in the future to have tangible economic benefits, that's still very early stages because efficiency gains really depend on scale and interoperability. But there are very important roadblocks. There are, important, we can already see important coordination failures. Everybody wants to do their own islands or silos. They don't want to be interoperable with each other if it's private run chains. So many islands and silos are being formed. The other at the other end of the spectrum, there could be a winner takes all effect. We could see big monopolistic platforms, and of course we may also see externalities, that is private interests overshadow public or global interest. So there are very important roles for public sector to play. Actually, I would say that without effective public sector, we are not going to see very large efficiency gains in these experiments. So we need to set the rules, and maybe public sector need to coordinate to ensure there is interoperability. There may be the need for standards, and importantly, uh, I think the US actually is failing its leadership because it's not offering central bank money. So offering central bank money is very important to ensure that we are going to have singleness of money in the on-chain monetary systems. So there are many experiments. I'm not going to talk through these given time limit. For example, HKMA is having a very nice project in the form of project ensemble. MAS, by the way, Asia Pacific leads the world, and these financial centers are doing fantastic experiments. Of course, I need to mention that in Europe, we have also Switzerland, the project Helvetia, and the tokenization, I think cross-border platforms, of course, in the form of Enbridge, that's one of the most successful projects, and central banks have done, and of course, Project Agora, being coordinated by the BIS and IIF, are also still ongoing. And I also need to mention, of course, uh, stable coins are part of the global regulatory efforts to regulate crypto assets. Importantly, we see very different approaches still globally in terms of the options or policy approaches to crypto assets. It runs a full spectrum from doing nothing until full ban. In the middle, of course, comprehensive regulation, the FSB-led global effort to put up, to establish regulatory frameworks. Uh, my view is that comprehensive regulation is still the preferred approach, although jurisdictional contests and capacity constraints may influence the choice of policy options. So let me just mention that international efforts have gone on for quite a few years now. We are seeing some convergence of the regulatory standards. I'm not going to go through all of the elements of all these efforts, but the observation is that global implementation is still lagging. For example, the implementation of stablecoin legislation has been slower than regulation of broader crypto asset markets and activities. There are many important gaps which still exist in areas like risk management practices, capital buffers, recovery and resolution planning, cross-border coordination and cooperation is especially problematic because we know crypto assets are borderless, they are global in nature. But at the moment, regulatory frameworks are still fragmented, inconsistent, and insufficient relative to the global nature of crypto asset markets. So let me conclude with the key messages I want to convey. That is really online monetary systems should also be multi-layered, firmly anchored by central bank money. We need to maintain a fixed value of e-money tokens, and the stable part is stablecoin, ensuring that is a tall order. And of course, maybe 100% reserve requirement in central bank money. That's the most prudent way to proceed. Programmable platforms could bring significant benefits for market efficiency, as many speakers have already pointed out. But there are important risks that could also emerge, and still we are at a very early stage, and the path towards scale and interoperability is very uncertain. And tokenization could lead to a more fragmented international monetary system, and opportunities and challenges for both the dollar and other reserve currencies. Let me finally share a thought that is plurilateralism in this world of geoeconomic fragmentation towards international collaboration and um, and public-private partnerships is probably more realistic, likely to be the way forward. So let me stop there. Thank you very much for your attention. Thank you.